Well, let's take another look at our grain trade this morning and see how things are shaping up a little bit. Well, we started out of the gate with a higher corn market this morning, and now we've turned mixed again, kind of like what we had overnight. The May corn is currently down a half cent at 5.59 1/4, but you have that new crop December contract still higher. It's at 4.91 per bushel, and that would be up about 6 3/4 cents now. It just changed. So they are still narrowing that spread by a little over 7 cents right now in the corn. Moving on to our soybean trade and our quotes provided by bar chart, you have the May contract 13 cents higher at 14.15 per bushel. And now compare that to the new crop November, which is only 6 higher. And we're at 12.69 3/4. So now they are actually widening that spread out here by about 6.5 cents. And in the wheat market in Chicago, it started out with a bang, got as high as 6.25 per bushel on that May contract. Now we're at 6.18 3/4. That would be up 7 3/4. And now the new crop July would be up 6 3/4 cents. We're at 6.17 1/4 per bushel right now. Moving on to the Kansas City market here, the moves aren't quite as strong. We have the May 2.5 higher. And now we're at 5.67 1/2. July is 2 3/4 higher at 5.74 3/4. On the spring wheat market in Minneapolis, the May contract is up 6 1/4 at 6.05 3/4. And we have July 6.5 higher at 6.15 1/2. In that cotton market today, we've been watching July and look at it go. It's up 126 points now at 80.53 cents per pound. And we have December up 144 points at 79.35 per pound. Well, let's go to Chris Swift. He's with Swift Trading. He's based in Nashville. And Chris, as we look at the markets here, we started out with a flurry, but then just kind of eased back a little bit here. Is it just pausing to catch its breath a little bit?
Well, I think so. You know, after Thursday's report that came out, Marlin, we had such a surprise in that, both in the limited number of acres to be planted and the stocks drawdowns that we saw, that a lot of this is still overflow from that, and good to see that it's still firm after all of that information had been given out.
You know, I noticed on the Commitment of Traders report on the corn, the large commodity funds or the managed money, they added 7,400 contracts on the long side. They bought another 7,400 contracts. That means they are now net long 395,000 contracts on that corn. That's a pretty sizable position just on that one side of the ledger there.
Well, and it is, but it's got good reason to be, because we know that we have a drought issue already in the works, and if it intensifies, that will create a lot more shortage of this year's crop as well. We had a bigger drawdown than what we had anticipated. So we know that China's hog use of corn has been significant. We know that even here in the U.S., what if ethanol comes back just a little bit and begins to crush a little bit more corn for some of the ethanol? Now we've even got more demand for that corn here in the U.S.
One interesting thing is they flipped on the Chicago wheat. They went from a net long to a net short last week. Is that significant?
Probably so, because you're now into the growing season of wheat. Most of the real bad cold weather is going to be over with, and within the next 2 to 3 weeks, you'll see what kind of emergence that is taking place. And you do note that keep an eye on the Minneapolis wheat, because of that spring wheat has been dry in those areas. We got a real close eye on it too.
Very good information. We'll come back in a moment and we'll take a peek at our cattle market and our hog trade here on a Monday. We'll see what's going on there when we come back. Well, let's move on to our livestock trade here on a Monday morning, and we are joined once again by Chris Swift. He's with Swift Trading. He's based in Nashville. And as we go to our big board here with our quotes provided by bar chart, we'll go to live cattle first. And right now we are hanging on to those triple-digit gains all across the board. April up $1.27 at 121.30 per hundredweight. June is up there $1.37 higher at 123.92. On the feeder cattle market here in the early going today, we have the April $2.40 higher at 146.27 per hundred, and that is leading the pack. The nearby is leading the charge higher. On the feeders, that would be called bull spreading by a lot of folks. We have the May contract $2.32 higher. It's at 151.55. And they still have a premium in all those deferred months out there at 160 or better out there. Lean hogs, so far this morning, we have the April 52 cents higher at 102.30 per hundredweight. Just a dime off our high of the day. The May contract up half $1 at 103.32. And June moving 40 cents higher at 106.72, but it's kind of cooling its jets a little bit after it got as high as 107.27 in our first update earlier this morning. So let's go back to Chris Swift and examine our trade here. We had the live cattle market firming up after we had the cash cattle market last Friday, moving up to that 117, maybe even a few instances of 118 last week. What do you think the cash market may do this week?
Well, we got a full week going this week, so I would imagine the Packers going to be up and running, and especially with a Saturday kill. So it's not going to surprise me to see them come out maybe a little bit early this week. And I don't know whether they'll have to bid up for them. We still know that there is lots of livestock on feed. And we believe that the month of March was another heavy placement month. So I don't think we're running out of cattle. A lot of it's just going to be whether or not the chain speed is going to be pulled a little bit tighter from the packer, or whether or not he keeps it with a little bit of slack in it like he does right now.
Will the weather become more of a factor on the cattle and hog trade as we get into barbecue season? Because, boy, I had my grill running all weekend.
Oh, no doubt whatsoever. Everybody is still talking much about the pent-up demand from the consumer, and I believe it is there. So I think you'll see more and more as the warm weather gets here. You'll see more beef moving out there, and that's what a lot of this week and next week's larger slaughter volumes will be in relation to, because by the time that product gets slaughtered and into the chain, it'll be closer to the end of April than it is right now.
Maybe it'll give even a little more boost to the market than what we already have. Chris, good to talk with you again. Thank you, sir, for all the help. Chris Swift of Swift Trading in Nashville. Tammy, back to you.